Okay, so this trading strategy, this class of HFT strategy,
high-frequency trading,
yep, is predatory, it is disruptive to markets, and it's actually unbeatable without regulatory change.
You went to the SEC and essentially told them that the biggest stock exchanges in this country were giving high-frequency traders an advantage over me, over the viewer, over the little guy.
Yes, and as the article pointed out yesterday, the exchanges admit that these advantages exist. So yeah, the question is it unfair? Should we reform it? And to what extent should such practices be disclosed?
Well, what did the SEC say?
I think my role is to basically educate non-insiders, which would include the regulators, about these issues, and they'll make their own statements about what they think.
Were they surprised by the information that you were giving them? Did they have any idea that this was taking place? Certainly the notion that high-frequency traders may be getting an advantage in the way stocks are traded couldn't be a big shock to the regulators.
I did not know about these practices until December 2009. I don't really blame the regulators for not knowing the detail that I gave to them.
Tell me exactly how this all happens. How do high-frequency traders gain this edge?
What came out yesterday is one abuse or predatory practice. There will be others that come out subsequently. This abuse is called queue jumping. It allows a sophisticated trader to get ahead of actually typical institutional traders primarily who are resting on the order book. It happens during a price move. So what I argue is that this is a corruption of price time priority rules on the exchanges. And that'll be debated in terms of whether or not it's fair or not. But I think it's already pretty much admitted across the board that queue jumping does happen.
You're saying that the exchanges are well aware and are the facilitators of this process?
Absolutely, yes.
They don't hide the fact that they give certain advantages to people, right? I mean, they'd readily admit that. Data feeds, they say that everything's fully disclosed. Is that not true?
That's not true at all. I mean, if I had not had this conversation in December, I would have wasted another 6 months of my life trying to figure out what was going on.
The argument you always hear from high-frequency traders: we make the markets more efficient, we add liquidity, we lower the prices of trades for you, me, and everybody else. Is that fiction or is that fact?
I would argue that if it was done without unfair advantages, it would be, I would buy that argument. But I don't really believe HFT can operate. The kind of HFT I'm arguing against, I don't think it can operate in these markets without these advantages. And actually, I did speak with an insider a couple months ago, and he tried to make the argument, we need these advantages, we couldn't make money without them. And I said, fine, let's get rid of them and see what happens.
Well, I mean, as I said, these are serious allegations. Why should we believe you? I mean, how do we know that these things even exist? How do you know?
I know because I was told, and then once I went through the process of disclosing these to Scott, I had to make sure that every I was dotted and T was crossed. So in terms of every regulatory filing, quite a number of meetings with insiders, I'm ready to go to battle over these, and we can bring these into the light, and we can have a public discussion on all of these abuses, and then the informed viewer can make their decision.
Certainly you could see why some would say, look, this is a guy who was trying to compete against other high-frequency traders. He came out on the short end of the stick. His business failed. Now he's angry, and he's disgruntled, and now he's trying to take everybody on as a result.
Well, that was in May of last year. That's probably pretty accurate in terms of my frustration. I mean, I felt I'm playing poker with a bunch of guys, and 6 months after I'm losing over and over and over, they say, we're cheating. Didn't you know? Everyone knew. And my problem was, after that, I thought that somehow, with my firm, that because I knew how these practices work, I could somehow trade around them. And I came to the conclusion that it is actually an unbeatable system right now.
You realize that even you couldn't compete.
I don't think anybody can compete, and I think that's outside of this particular practice, and that's why it's 50 to 70% of the U.S. market, because the diversity of algorithmic trading traditions have been annihilated by this particular practice.
Mr. Bodek was referring to that Scott Patterson did some great reporting in the Wall Street Journal over the last couple of days regarding this very issue. As for a reaction from either the NASDAQ or the New York Stock Exchange, no comment from either of those exchanges when contacted by CNBC.
You can't, and if you go back there, and read the articles of a few years ago, New York Stock Exchange was talking about how they were building data centers so that they can get these HFT traders, and they themselves can get a jump on your normal trader. But here's the issue, Scott. I'm a capitalist, and to me, part of me says that aside from the line jumping, where you've got an order and they get in front of you and they can by the rules of the exchanges and the regulators, aside from that, maybe they built a better mousetrap, and they do suck liquidity from the market. There's no question about that. But you ask an HFT trader about that, and it's like asking a liar, tell me the truth. Are you lying? You never get the right answer. So it does have to be legislated out, and it should be. And normally I'd say capitalism is great, and I believe it, but at some point it harms the greater good, and you've got to get rid of it. So they come in there and scalp quarters and eighths. I've got my price targets where I'm willing to buy and sell, so it doesn't really affect me. But for the average investor, it does destroy confidence and destroy markets, so get rid of it.
Dennis, not to reveal your age, how long have you been trading in the markets?
40 years.
You hear stories like this, what does it make you think?
I don't get as concerned as everybody else gets. I think that they really do create liquidity. I think there are clearly advantages that somebody's going to find until it gets closed.
What if they're not finding the advantages? What if the exchanges, to Mr. Bodek's allegations, are true? What if the exchanges are giving them an unfair advantage over you?
That's unfair, and that needs to be stopped. If what they talked about yesterday, and I read that article, interesting article, if my order went in and his order gets to go in front of me, even with me being first in line, that's wrong. That needs to be stopped. But stopping high-frequency trading, I think, would be an illogical and idiotic decision. I think it creates liquidity.
What's the ordinary investor to think? Right? Yeah, and let's just also say that this week we were talking about this issue yet again, right? Was it Monday you had an issue with the oil market, and then Tuesday you had another issue with several energy-related names showing these wild moves into the close. No one seems to know why. Everybody has a theory, but no one can put their finger on exactly what's going on. The individual investor sitting at home says, why the hell should I put my money in the stock market? Because I keep hearing on CNBC about these problems.
They think the game is rigged. I'm not convinced the game is rigged. I think the practice, to me, doesn't serve a lot of purpose. I think it does add liquidity. I'll push back on Steve. They're not scalping for quarters and eighths. I mean, they're scalping for hundreds of cents. So I don't think the public is disenfranchised as this gentleman would like you to believe they are. They are disenfranchised on flash crash days, which nobody can explain why. And that's going to happen again, folks. I hate to tell you. But we talked about Monsanto, just to give an example, are you disenfranchised when we talk about a Monsanto 3 days ago and then 2 or 3 days later it's up 3%, so you missed it for 1/100th of a cent because an HFT got in front of you, but you won it for a couple bucks. So don't get crazy with this high-frequency trading. I don't think it disenfranchises the public as much as you're led to believe.
Stephanie Link, all everybody wants to know is if they got a fair shot, right?
Yeah, and whether it provides liquidity or not, the point of it is, and it's already been talked about already, is the confidence factor. This is not going to lead to the individual investor putting money into the stock market, period. It's one more reason why they will stay away, and that's problematic.
All right, coming up, tracking crude oil's next move as traders take profits. The commodity is off 7% over the past week, and the exclusive interview